And we would like to welcome you to our monthly event where we review the situation in Ukrainian economy in the context of the Russian war against Ukraine. This event is implemented together with the German economic team, like all of the events within this cycle, and our content media partner is the Ekonomichna Pravda, which is a leading Ukrainian economic publication. Today we'll be talking about the IMF program, and the way we shaped the topic for today's discussion is how the IMF program will impact budget, taxation, and stability in Ukraine. One of the key areas of economic reforms and reforms in general within the new IMF program for Ukraine is definitely the development of the national income strategy and support for the income mobilization to ensure financial support of the process of repelling Russian aggression on the battlefield. Which is why today, during this event, after the standard monthly overview, we will be discussing the IMF programs from this viewpoint, which is why we have invited the guests that will be presenting at our event today. And when it comes to income mobilization for budgetary needs, we will be focused on towards the end of the presentation. But I would like to give the floor for the introductory remarks to Garry Poluschkin, who is the project manager of the Joint Economic Team in Ukraine.
Thank you very much. Warm welcome from Berlin to all participants on today's presentation of the monthly review of Ukrainian economy by the Center for Economic Strategy. It's a great pleasure for me as the project manager for Ukraine of the German economic team to introduce this webinar as part of the continuous strong cooperation between the Center for Economic Strategy and the German economic team. The German economic team is an economic policy advisory project financed by the German Ministry for Economic Affairs and Climate Action and has been active in Ukraine in advising the Ukrainian government and state institutions for more than 15 years. I'm very glad to see so many interested listeners and participants because this webinar can bring in touch stakeholders from Ukraine and from abroad and to analyze and improve the economic and financial situation of Ukraine facing Russia's full-scale invasion. This format provides an important opportunity to discuss the state of the economy, which is a regular part of this webinar, as well as today's important topic, the role of the IMF program for Ukraine's macro-financial stability. The role of the fund in the current circumstances is extraordinary. It disbursed $2.7 billion in 2022, and a new multi-year program was approved for Ukraine of total $15.6 billion in 2023. For the fund, it's an absolutely new experience to adopt such a program for a country facing a full-scale invasion. In this context, I'm very delighted that the Center for Economic Strategy has put this topic on the agenda and invited such high-ranking policy makers and experts. I'm giving back the floor to Maria and Hlib, who hosted today's event.
Thank you, Garry.
And now I would like to once again reiterate, just look at all of the similar events. We have simultaneous interpreting taking place. And so today we will be having people presenting in English, we will be having people presenting in Ukrainian. And so my colleagues who will be presenting the overview of Ukrainian economy in April, they will be presenting it in Ukrainian. So the presentation is up already. It is in English itself as a rule. for our events, but it will be presented in Ukrainian. So I would like to give the floor to the senior economist of the CES, Dmytro, who will brief you on the general tendencies of this month and the changes in different economic sectors. Dmytro, the floor is yours. I apologize, Dmytro seems to be having some troubles with his audio. We are on our way to fixing these issues. All right. For the last 2 months, we haven't had a presentation during the air raid siren, and we kind of got accustomed to having no air raid sirens over the past 2 months. And I think it might be related to the counteroffensive, because maybe the Russians are trying to distract the Ukrainian air defense by conducting these maneuvers. There's this theory. Of course, there were 3 conditions when it comes to counterintelligence: that the exhaustion of Russian forces in the east. This is the new supply of different weapons and equipment, and the change of the weather. We can see that the 3 criteria have been more or less fulfilled, and so we are expecting the counteroffensive to happen in the nearest future. When it comes to the macroeconomic trends, in this month, there was no macroeconomic statistics published, at least within the first quarter. They will be published a little bit later, but there was yet another review of the forecast in different institutions, both Ukrainian and international. And as usual, we see the patterns that we saw a month ago, that the organizations that were too optimistic, they're kind of bringing down their forecast, and the organizations that were too pessimistic, they're kind of improving their forecast. And so we see that in this regard, the International Monetary Fund has a very interesting stance, because they stopped publishing the forecast. They stopped to make the GDP growth forecast beyond 2023 because of the high level of uncertainties, as they have claimed. When it comes to the National Bank, they have published new data when it comes to business activities, and we can see there has been the business activity expectation that has grown beyond 50%, which means that the number of optimists is higher, and the indicators have improved compared to the entire duration of the full-scale invasion, and even a couple of months prior to the full-scale invasion. So business expectations have improved drastically, which is related to both the stabilization of the electricity supply, but also better expectations amongst businesses and regular consumers when it comes to inflation and consumerism as such. We have reviewed the assessment when it comes to damages. They have increased by $2.5 billion. It's approximately equally distributed amongst the sectors, so we did not have a sector that is leading in terms of damages increase like last time we had with iron ore industry. So currently we've tried to make sure that our damage estimates cover all of the sectors. When it comes to sectoral analysis, the heating season is over, and so the electricity supply has improved. And we do not have serious issues with other commodities, so we no longer have rolling blackouts. And on the governmental level, we can see that the government is even able to stockpile some resources for the next season when it comes to gas per se, for the next heating season. we can even allow ourselves to export electricity to a certain extent when it comes to the resource that cannot be stockpiled. And of course, there were certain administrative issues with exporting to Slovakia, but this issue is being tackled right now by the Ministry of Energy. If it wasn't for this, the export level would be higher. So instead of 90 megawatt hours, it could have been almost 150 if it wasn't for these issues. Discussions have also started on increasing tariffs for the households. The energy experts are warning us that they might have to introduce new rolling blackouts during the summer because we might face deficits due to the necessary maintenance processes for the nuclear power plants. When it comes to the metal sector, there were no significant issues. But since all of the Ukrainian businesses have published their financial reports, we were able to see what are the net losses of all different companies. And of course, after 2021, which was a record level when it comes to profit for metal industry, everyone has suffered losses. The situation when it comes to agriculture is also very complicated because Russia once again has sabotaged the grain deal. And our Western partners continue assisting us when it comes to military and financial means, but there are certain political complications because at first certain EU countries banned exports of some Ukrainian raw materials, grains, and oilseeds, and after complex negotiations, EU has agreed to replace these unilateral measures with EU-wide measures and kind of ease them. And it is now related to a smaller number of goods than it was before. And it is a temporary measure, temporary restriction. But the precedent is there and it's very unpleasant. Nonetheless, due to this factor, due to logistics issues, we can see the change of tendencies when it comes to pricing. And also there were many claims by different industries that they will try to invest into production to make sure they export not raw materials, but product with added value, and that will definitely ease up the logistics restrictions, and it will be a lot better for the Ukrainian industries as such. This concludes my part of the report. Thank you, Dmytro. The next part of the report will be pertaining to what is happening in terms of monetary sector, financial sector, and with the FX exchange. It will be presented by Maria Tomilna, our economist. Maria, the floor is yours. Good afternoon, everyone. I hope you can see me and hear me well. Yeah, it works. All right, let's move on towards the analysis of the monetary policy. We will be looking at the main rates. The key rate remains the same. It's at 25%. This decision was made to actually support the measures from the results from the previous measures, and also in order to ensure the stability and support the trend with the decrease of the inflation. At the same time, due to the improvement of the macroeconomic situation, we are expecting that the decrease of key rate will happen in Q4 of 2023. The yield of 1-year hryvnia military bonds remains the same at 18.5%. Also, at the end of April, the average rates on retail deposits remained almost at the same level as in March. If we look at the growth of consumer prices, it has slowed down to 14.8, which is a quicker decelerate, and we're expecting for the inflation to continue decelerating due to the decrease in the price of energy resources on the global market, and also the efforts of the National Bank. And considering the combined effect of all of these factors, the National Bank has reviewed their forecast from 18.7 to 14.8% when it comes to inflation. If we look at the inflation closer, the basic indicator has decreased to 19.8 due to the better situation in the energy sector, improvement in the cash sector of the FX market. Also, these factors, a moratorium on increasing household utility prices helped. The administrative regulation of prices has returned to 11.5%, and due to the fact that fuel is more accessible, the fuel prices have also decreased. Even though inflation continues to decelerate, there are still certain risks due to the high level of uncertainty related to the war. Let's also look at situation at the FX rate. It remains fixed and unchanged after it had been corrected in April of last year, but overall situation remains to improve. And in April, we saw the tendency towards the decrease in the sale of foreign currency. At the same time, in March, the international reserves increased by 10% and reached the highest record level in the past 11 years, which is $31.9 billion. They rose primarily due to influence from foreign aid amid a decreased volume of net FX sales and a moderate external debt repayments by the state. Also, on April 21st, the NBU increased banks' ability to sell foreign currency to households and enabled the launch of e-residency project to boost cash FX market trends. If the payments are taxed in Ukraine, or if the services have been provided in Ukraine, overall, these changes should not necessarily influence the FX market or international reserves, because these transfers will be made in foreign currency. Also, within the framework of our today's meeting, it's important what type of requirement, what are conditionalities were provided by the IMF when it comes to monetary policy. Of course, an important factor is sustaining of the financial autonomy of the NBU and abstaining from the monetary financing of the state budget. Another important strategy is the condition-based strategy to a more flexible exchange rate, ease of FX restriction, and return to an inflation targeting framework. Also, the National Bank has promised to resume scheduled on-site supervisions, inspections for both bank and non-bank financial institutions in order to better identify the state of these sectors and also to unbind all emergency prudential measures by the end of March of 2024, but that is only if the real conditions allow. Also, the National Bank will continue on working towards strengthening bank regulations and supervision, trying to bring Ukrainian legislation closer to EU legislation, and also to apply the risk-based approach in banking supervision. What I would also like to highlight is that IMF has highlighted that any decisions that have the potential to increase state ownership in the banking sector should be taken in consultation with the IMF staff, and also they have to be limited only if it comes to the national security during the martial law and comes to maintenance of the financial stability. That concludes my part of this report. Thank you. Thank you, Maria. And now we're moving forward to the topic that will be the main topic of today's discussion, is the situation with the budget, the situation with the stability of the state finances, and the first unofficial speech that is not within our agenda but still allows us to generalize the situation as it is per today. It will be presented by Yuri Haidai, the senior economist of CES. Yuri, the floor is yours. Hi, I hope you can hear me and I hope you can see my presentation. I will slow down to make sure that the interpreter can get a breather after my colleague, because she was just speeding through her presentation. At the very beginning, we will look at the results when it comes to tax revenues. Import in April, according to our preliminary data that has been published by the Ministry of Finance, the import revenues when it comes to VAT and customs, it has declined slightly. It corresponds to the to expectations of decrease in import revenues the second quarter of this year. At the same time, the domestic VAT has demonstrated a great result, the best over the course of the last couple of months. And due to the increase in gross VAT paid and a decrease in VAT refunds as compared to March, and I think compared to a lot of previous periods, the other revenues are within our expectations range, and we can say that tax revenues are not a surprise, nor a good surprise, nor a bad surprise. They're what we expected, truly. But if we look at the comparison with previous years, on this graph specifically, when it comes to the ratio of own revenues, both tax revenues adjusted for accumulated CPI, and if we compare that throughout the years, you can see 22, 23, and 21. What is most interesting is that we have seen a significant growth of non-tax revenues, and they have exceeded the annual budgeted amount of 184 billion hryvnia. We know that in the first quarter, 131 billion of such revenue has been received, and we also know that the National Bank revenue transferred in April constituted 71 billion. But it's also very important to understand here that the non-tax revenues can also comprise not only funds but also other types of assets that are accounted for by the state, and we can expect that some amount of these assets are specifically the military aid to Ukraine, military support. Without getting into detail, it's very difficult to make an evaluation of what part of these own revenues are funds. Specifically, overall tax revenues. I just want to highlight here that this comparison has been made, has been revised to counter inflation. And so if we talk about the prognosed revenue and the previous revenues, the predicted revenues, they actually factor in inflation over the course of the last 2 years if compared to 2021. And so factoring in the inflation, we can see that these revenues will be somewhere between 60 to 80% if compared to 2021. And towards the end of the year, we can see that the graph is going down, but please don't be alarmed, because those of you who work with us know well that there were significant amount of funds in 2021 received towards the end of the year, and so it's difficult to compare with this year. And overall, we believe that the situation is within what we have assessed, what we have prognosed, and we know that a lot of the forecasts are being revised and improved, both by National Bank and other analysts. And also we can expect the resumption of the pre-war taxation when it comes to the return of the simplified tax system and the return of the pre-war excise rates for the fuel. And we think we can expect better revenue rates When it comes to expenditures, I'm not going to speak for a very long time, but the situation, as my colleague Maria has said, remains quite scary because 57% of the total expenses in the first quarter of the state budget, those were defense expenditures, and if we add law enforcement and if we add justice systems, we will have almost 70% of all expenditures. The largest civil spending item, of course, is social security and welfare, and that reached 118 billion hryvnia. Other expenses outside of these three main items, as of today, they comprise only 14% of all expenditures. So the expenditure ratio is unprecedented, and if we talk about fiscal balance, looking for resources for other expenditures, it's important to understand that within the existing structure, there is almost no wiggle room. When it comes to external funding, in April, Ukraine received a loan from EU as well as grant funding from the US. Additionally, a first loan tranche of 2.7 billion was received from the IMF. Two more IMF disbursements are planned for 2023 by the end of the year. And so we have $5.6 billion of external foreign financing in April. This is the highest monthly amount of support from our international partners since the beginning of the war, and this enables us to be quite confident when it comes to budgeting. And it allows for all the stakeholders to breathe out for a little bit, particularly the National Bank. But if we look at the financing gaps, when the budget was reviewed in March, as of today, we saw the we saw that the money that has been disbursed and pledged covers the financial gap almost completely, but at the same time, it's not completely filled, and the gap right now is $13.2 billion. It's important to understand that there might be some non-public commitments to provide external funding, some commitments, promises made by partners behind closed doors for Ukraine. But the graph that you can see, this visualization takes into consideration the pledges that were publicly made. And I would like to reiterate once again that due to this stable funding, stable external funding since the beginning of 2023, Ukraine has not resorted to monetary financing. And we really hope that this trend will continue on. I would like to just briefly cover the primary conditionalities of the IMF fiscal policy program. First and foremost, I would like to highlight the requirement pertaining to, well, the conditionality pertaining to the national revenue strategy that has to be developed by the decision of the Cabinet of Ministers, the Ministry of Finance, and the key principles of the strategy have to outline the taxation policy principles, both for short-term and for the post-war period. They have to draw attention to the reinforcement of the customs and tax services, to revise the simplified taxation system. The IMF document mentions focus on decreasing the optimization of expenditures for labor payments, but we know that there are other ways to implement the simplified taxation systems that also impact the mobilization of internal revenues And also, it is important to align the VAT and excise legislation to EU legislation. Yet another key criteria is to strengthen the institutional capacity of the Bureau of Economic Security, first and foremost because the functioning of this bureau is a counterbalancing instrument that impacts how efficiently is the state able to carry out its fiscal policy, how flexible and how much wiggle room is there for the dishonest businesses to decrease their taxation load, and how easy it would be to identify these dishonest practices. And also, returning to midterm budget planning, of course, restoring regular reporting, controlling public guarantees, because there has to be improved transparency when it comes to expenditures after the post-war period. There's also a range of other conditionalities, but I will not take any more time from the invited speakers, who will in more detail explain their views when it comes to the issues of fiscal policy. Thank you. Thank you, Yuri. Thank you for such elaborate explanation of both the program conditionalities and the objective factors pertaining to the current Ukrainian situation, pertaining to revenues and expenditures. Overall, we in CES are planning to focus on the taxation policy in our research, considering also the mission in front of us, provided by the memorandum on financial economic policy. Definitely, we will have certain discussions happen in the government, in the Verkhovna Rada, and of course, we, and Yuri specifically, who is responsible for this field, will be working on it, considering the guidelines of the European Union that regulate taxation policy in EU member states. And we will try to look for opportunities for Ukraine to optimize the mobilization of the state revenues. I would like to move on towards the formal panel discussion. Today we have 3 participants in the discussion. That's Danylo Hetmantsev, who is the head of the Verkhovna Rada Committee on Financial Taxation and Customs Policies. That's Robert Kirchner, deputy head of the German economic team, and Vahram Stepanyan, who is the standing representative of the IMF in Ukraine. I would like to start posing a question to Vahram.
When I read the press release that opens the package of IMF documents related to the new EFF program, it was very interesting that when you look on this first stage of the program, that is for the time policies for the time of war, you could read as a very first measure, focus on bolstering revenue mobilization. And as Yuri said, national revenue strategy is one of the core policies reforms that are within the program. Why IMF decided together with the government to focus so much on revenue mobilization, not on, for example, supporting the economy in times of war. So the floor is yours. What is your framework for Ukrainian economic policy and for fiscal policy for upcoming period? How could you comment on this? So please.
Thank you. I'd like to start first by thanking CES team for organizing this webinar and for inviting me. Hlib, maybe before answering to your first question, I can take a few minutes to refer to some points raised earlier by some of the speakers. Absolutely. And also maybe briefly to talk about the new IMF program. Yeah,
for sure.
So in terms of the program, I mean, just a brief summary, if I may. So the new program, Extended Fund Facility, or EFF in short, it aims to help Ukraine secure, first of all, secure macroeconomic and financial stability, and also to help catalyze more external financing, which is crucial for the country and its economy, and provide a framework for structural policies and structural reforms that will hopefully lay the foundations for post-war economy and reconstruction. And all this having in mind that this is happening in the context of EU accession. And the program, as you already mentioned, is designed to have a two-phased approach. In the first phase, focus would be on securing macroeconomic stabilization and undertaking critical structural reforms while the war is still ongoing. In the second phase, once active combat has subsided enough or sufficiently, the policies will focus on further entrenching macroeconomic policies and starting a more expensive set of structural reforms to restore external viability, medium-term external viability, to support sustained and robust growth, and facilitate, as I mentioned in the context of EU accession, to facilitate Ukraine's path towards EU accession. Now, a few points I wanted to note that were mentioned by earlier speakers. So first, about the GDP forecast by the IMF. Yeah. So I just want to note that there is a more up-to-date publication out there. It is the IMF staff report for the new EFF-supported program. I think the reference was made probably to the IMF's World Economic Outlook, which was published in April. And the way it works is that the projections are locked quite some time before the publication happens. So since then, we had published our staff report, which, by the way, I think it's probably the first time that all staff report and most of its annexes has been translated into Ukrainian and is available on IMF website. So in there, we do have long-term projections for real GDP change through, I believe, 2033. So I would refer to that publication for most recent. And in terms also the economic outlook, I just want to say that we are currently reviewing our latest projections and estimates, and it seems that the recent data releases suggest that economic activity seems to be more resilient than what we assessed at the time of the EFF approval. So we will most likely revise our projections, and this you could see, when we publish our next staff report. Yeah. Now, returning to your question, Hlib. So I would think that everyone probably would agree that Ukraine needs to raise more revenues domestically, given its large spending needs. Not only now, but also in the foreseeable future. I mean, the spending needs are very large, just to mention the defense, the reconstruction, and also social needs that need to be financed. Yeah. And that's why this is a key policy element under the fund-supported program. I mean, if you think during wartime, the role of the government in the economy, it's natural in a sense that it increases. And it will likely remain elevated for some time, given the huge spending needs that I mentioned. And, from growth perspective, I mean, if you think what is very important, I would say, is that the impact of the role of government to a large extent would depend on public governance, both in raising revenues through taxes and customs, and also in spending public money, but as well as ensuring rule of law, protection of investor and creditor rights, etc. So I would say if government manages to carry these functions as much in a fair, effective, and transparent way as possible, then I think it would still contribute to generating economic growth, in a sustained manner. Yeah. Moreover, I think strong public governance, especially in the areas I mentioned, will lay ground for robust and sustainable growth, not only now, but also for medium term. One more point I'd like to make in reference to this is that if businesses, Ukrainian or international foreign businesses, see a level playing field in the economy and strong rule of law, then this will positively affect their decisions to invest or expand their operations in Ukraine, and thus contribute to economic growth. Now, again, coming back to the needs, right? I mean, spending needs are very large, and role of state will necessarily be large in recovery and reconstruction. There are areas, especially in key infrastructure rebuilding and addressing social needs, where it is the public sector that will lead the efforts. And this public spending, which we hope to be effective and efficient, will hopefully crowd in private investment, which will again contribute to economic growth. So I'd like to highlight here that public sector governance is an important part of the EFF-supported program, under which the authorities have committed to implement continuous reforms to strengthen governance and anti-corruption frameworks. I think I'll stop here. Thank you.
Thank you, Vahram. I will have just one question and then pass the floor to Danylo. The question is the following: like, from your experience, taking part in policy debates, policy discussions related to Ukraine's economic policies in times of war, what are the biggest risks? What are the biggest domestic risks? Like, certainly, like, there could be risks of military escalation, etc. But like, in terms of domestic policy risks, what are the most important, in your opinion, that could undermine the program? Like, what we as Ukrainians should not do not to undermine macro-financial stability?
Thank you. Well, the escalation of the war is obviously the main risk, and we have discussed this, and we have also in our assessment and program documents prepared a downside scenario where we assume that there is an escalation, and then what happens. And the program is built in a way that it also will work under downside scenario. Now, a major risk I would mention that, so what is key, important for the program? Implementation of sound policies and public sector governance reforms will be critical in the success of the IMF-supported program. And relatedly, failure to implement them may risk external support for Ukraine. So this is, I think, very important. Also, securing a financing package to enable the government to carry out its functions will be important, and in a way that financing is not creating large inflationary and exchange rate pressures. That is, avoid monetary financing of the budget deficit, and in a way that debt sustainability is ensured. So this is also very important. I'd like just to mention that with our program, the IMF has helped the government to put together a much bigger $115 billion package of financing for the next 4 years. And it includes 15.6 billion of IMF money. And just one more addition or update here, that the first tranche of $2.7 billion has already been dispersed under the new IMF program. Other risks I would mention, if domestic revenue targets are missed or expenditure pressures increase so much that the government has to resort to large-scale monetary financing of the deficit. I think I already mentioned this. Yeah. So overall, just to conclude on this question, I would say that reverting to some important policy frameworks that existed pre-war is very important for macro stability. Thank you.
Thank you, Vahram. Данило, власне, коли я прочитав те, що
Danilo, when I have read in the agenda, in the IMF program, that they will be discussing the IMF program and we will be discussing the national revenue strategy, this also subsequently raises the issue of taxation reform in Ukraine. The taxation reform has been implemented multiple times in multiple formats by different governments, and it is quite clear that in its classic meaning of the functioning of public administration, that would have to be the initiative of the government, because the Ministry of Finance has signed the memorandum. But we know that historically the government usually the taxation committee impacts the development of the taxation policy. But in your opinion, how do you think the strategy of revenue should look like when it comes to the key priorities? And do you see right now any specific issues that would be up for significant discussion? Thank you. Thank you for this briefing. Thank you for the possibility to exchange opinions, and thank you for the possibility to share my ideas when it comes to the development of the taxation system and the fiscal policy of the state in the nearest future. When it comes to cooperation and even joint vision of the Ministry of Finance, Prime Minister, and Verkhovna Rada Committee, when it comes to our joint vision of our future fiscal policy and our taxation system, I can confidently say that on most issues, we see eye to eye. And we don't have serious disagreements when it comes to what the revenue strategy should include and what the legislation should be amended to. However, there are certain points I would like to draw attention to. The first one is our reserves, that as of today has not been used for the state revenue. That's customs, that's the excise markets, fuel, alcohol, and tobacco products. And that is also the improvement of administration of VAT when it expands beyond the system of electronic administration, but when it comes specifically to conducting checks and conducting reviews of taxpayers, something that we are unable to do right now due to the moratorium introduced at the beginning of the war. So when it comes to systematic changes, we have these short-term goals, and the short-term goals are clarified in the memorandum. It is the draft law 5401, which describes the return or almost complete return if we disregard the smallest businesses a return to pre-war state of affairs. If we talk about midterm goals, they're also quite clear for us as well. There is nothing to discuss there, at least amongst the financial team. Once again, that is the Ministry of Finance, the committee in Verkhovna Rada, and the Prime Minister. When it comes to what has to be done, first and foremost, is the electronic administration system that has to be improved, taking into consideration the risk-oriented approach, to make sure that the smaller number of businesses are accounted for by the blocking measures. And for us, that would enable us to potentially work or limit only the operations that have indicators of fraud. The second is a risk management system, and this is a critical issue that we have been discussing for a while, but it's just words for now, unfortunately. And we have come close to a solution, I believe, and it is also reflected in the strategy of revenue, or has to be reflected in the revenue strategy. The risk management strategy has to be both automized and just a system that encompasses the tax life cycle of a taxpayer. Taking into consideration all of this, we have to create the profile of a taxpayer. This profile already exists. It has been presented by the State Taxation Service. It does not look the way we would necessarily want it to look, this profile, but it's this basic generic profile. It's a good start. And so this taxpayer profiles, the evaluation of the risks, have to be the key factor defining the level of political control of a certain taxpayer. And this is something that we have already introduced at the State Taxation Service, and this is something that we would like to introduce at the automation level. So we would like to introduce software, as it would enable transparency. We would like to have this very transparent program that would use specific criteria that are understandable for the taxpayers themselves, that they have to carry out if they would like to decrease their risk level or to mitigate their risks altogether. Also, the improvement of administration of cooperation with the taxpayer on all levels, primarily in a digital form. This is a digitalization that we have proclaimed at the beginning of last year. It's something that we are introducing. We are allowing physical entities to update their declarations online. We have an updated center to assist these individuals. We have this taxpayer profile. We have already have placed an order to develop software to introduce Softy files. We kindly have a draft law under review for the digital excise mark, and also a digital account of a taxpayer is improving day by day, and we are making better. We're trying to ensure online training to both taxpayers and staff. Digitalization is this overarching task that we have, as it has to encompass both the improvement of the VAT administrative system, the improvement of taxation in general. We believe that within this framework lies the key to the improvement of taxation relationships. We do not think, talking about the taxation system as such, that this tax reform that is being talked about, that it lies in the decrease of taxation rates. I don't think that's what it is about at all. We believe that the reform lies in the simplification of taxation processes through digitalization, which is why we have been working really hard on it. We have been working and negotiating, and we try to present these new changes to the public that we implement almost on a monthly basis that are revolutionary. Another line of effort, which is also related to taxation reform, is ensuring ensuring that our legislation fits the requirement of the EU. It is the must-have for our country to make sure that our taxation legislation is completely unified with European Union legislation on taxation. Definitely, we're continuing negotiations, and we will continue negotiations. We will ask for a transition period during the upcoming negotiations, as these conditions would potentially decrease the pressure on our business from the norms that will be just newly introduced. But this is up to negotiations, and we will definitely try to find the same page on how and when do we introduce these new norms. But in one way or the other, we are convinced this is something that we have to do, and we have to do this as soon as possible, giving to the society and the businesses the idea of a deadline until when we'll be able to do that. And the third line of effort is huge, and there I would like to ask for the support of our colleagues from the International Monetary Fund, is the institutional reinforcement of 3 financial bodies. That is the State Taxation Service, the State Customs Service, and the Bureau of Economic Security. In particular, when it comes to the State Customs Service and the Bureau of Economic Security, we see quite a significant potential that can be converted into budget revenue, into fair budget revenue. Because unfortunately, there are significant and systematic manifestations of corruptions in these bodies, despite the war. We have our own recipe, our own solution, and that I think that is worth discussing, at least with the cabinet of ministers, when it comes to deadlines, when it comes to overall concept, right? I think the details will be definitely up for discussion, but we have our own approach, our own recipe, our own solution through the restructuring of the Bureau of Economic Security. We have a draft law which is mentioned in the memorandum with the IMF through the open competition, an open selection process for the leaders of this body, and through the retesting of the staff. We want to implement the same reset approach for the customs and the taxation services, but we want to also envisage a temporary or standing conditions when it comes to remuneration. We believe that the current remuneration, current salaries, they do not completely reflect the requirements that we have when it comes to avoiding corruption risks. So we believe that increasing the remuneration is a necessity. And so we want to introduce this reset for all of these 3 state bodies, and we also want to have the guarantees of political independence for these 3 bodies. We want to introduce a procedure of dismissal. Current dismissal procedure is quite complex, but we want to make sure that the people who are appointed to these positions know that they have time to introduce systematic reforms, even if these reforms may be a threat to someone. This is something that our public administration is struggling with, is temporarity. When you enter a state body and you don't know for how long you're there, and that does not allow you to implement policies that would be effective long-term in 5 years per se. And so you're concentrated on what you're able to achieve in a month, what will bear fruit in a month, which is not necessarily the right approach all the time, or in most cases, this is a wrong approach in general. And so this carte blanche and this guarantee of job security for at least midterm is also a necessity to see success and to see real results of this reform. In coordination with our partners, if we were to move forward along all these 3 lines of effort, we would definitely be able to ensure state revenues, proper state revenues. We would be able to ensure fair and transparent taxation rules for businesses. We would be able to make sure that our taxation system fits the requirements of EU, and thus we would make sure that it is attractive to investors, not because of the low offshore rates, but instead because of the rule of law when it comes to taxation relationships, because of transparency, because of simplicity, and because of usability of state services provided to all taxpayers. Thank you, Danylo. I understood the logic behind what you're saying, that your vision of the taxation reform is mainly focused on administration and on the improvement of the current gaps in taxation and taxation rates to make sure that the system is less risky and more attractive to potential investors.
Robert, you did your own analysis on the IMF program for Ukraine and on focuses that this program has. What could you comment on it and on those issues that were raised by Danylo and by Vahram? So the floor is yours.
Yes, thank you very much, Hlib. Good afternoon. Thanks for having me. And obviously, it is a challenge to put some new, fresh thinking into what Vahram and Danylo said already. But let me nevertheless maybe take this from a bit different angle and add some new insights on that. So first of all, I think it is very good that we have finally a long-term IMF program. I mean, the cooperation with the IMF was always close. It was especially close during the war, but we had several shorter-term programs with some money involved, some lending involved, and then some program without lending. But this multi-year program, which again has 2 different phases, as Vahram mentioned, is, I think, a very good step in the right direction because it kind of brings the cooperation to a new level. I think that's the first thing. Second thing is, and that was also, I think, mentioned, is it was a big risk for the IMF to lend into a country at war. And I'm not sure whether it has been done before in that context. I doubt it, actually. And that is only possible because the big shareholders kind of assured, or the key shareholders assured that this program will not run off track, or at least they gave financing assurances. I think that's also written in the document, which then signals, again, the international support behind that, right? I think this is a very important message also. So the key international partners of Ukraine are very much behind this program. Now, Ukraine has a big history of programs with the IMF. I've seen many programs in the past, some successful, some less so. I think this one is very much different from previous engagements, right? Very often, the main focus on the programs was to correct past policy mistakes. in Ukraine. We know the fixed exchange rate, loose and populist fiscal policies, wrong energy pricing, corrupt lending practices in the banking sector. I mean, all these things are to a large extent behind us because Ukraine really worked on that. And so this is now pretty much different. And then the idea behind an IMF program is always to regain access or to ensure access to private capital markets, right? That eventually Ukraine can borrow on the market. Now, this is a different story now as well, because there is a standstill agreement and some sort of debt restructuring will most probably come in the future. I think the program is also quite vocal on that. Obviously, we don't know the details. And at the moment, I think also the whole uncertain situation is not in the right, we are not in the right moment to discuss these parameters, but eventually they will have to come. I mean, if we look at the document about the debt to GDP ratio in the downside scenario, it goes, I think, up to 150% of GDP, which is clearly not sustainable. So there is already kind of something coming. We know that, we don't know the exact shape, but that also means that there are very unclear prospects for future market access, at least in the near future. I mean, once the war is over and won, that's another story. So what is the interesting or the crucial part of that program? In my view, it is the catalyst for international support, because I think also Vahram mentioned it. The money is not really the issue here, right? The program is around $16 billion out of, I think, 115 billion already pledged internationally or paid already. So it's not the major part, right? But we have with the IMF an experienced and trusted institution by all partners, basically, who support Ukraine, which ensures that this international support, bilateral, also multilateral institutions, is kind of coordinated and cooperated. Everyone is on the same page. Everyone works with the same framework, with the same data, so that no duplication is going on. And this is, I think, very important. And this is, I think, in my view, the true important role of the IMF in the current circumstances. So it has a modeling framework, very difficult, but still it has one. And from that, you can calculate the needs assessments. Obviously, huge uncertainty. A lot of data are not there or not public, but still something is there, which is trusted by everyone. Data verification is important. So it's a trusted partner for all sides. And that is, in my view, the main contribution, plus the conditionality that was already discussed, which kind of anchors policy. But here I would argue Ukraine did already in the last year, or has proven in the last year, that Ukraine did actually a lot of right steps without an IMF deal behind. So in that way, it follows the spirit of a lot of conditionality. Not everything, so there are obviously issues. But overall, I think it's also a completely different story from the past, where Ukraine was actually behaving as if it is in an IMF program, and even without the formal program. So, but this anchor of policy to ensure macro financial stability during the war and after is, I think, a key aspect. But I'm quite confident that this program will succeed in reaching its objectives. So much from my side, just these few observations. Thank you, Hlib.
Thank you, Robert.
And now I have a question to Danylo and Vahram. I think I would like to start with Vahram. But this is a question to both of you. How do you see the approach to organizing the work on this national revenue strategy? Because prior to the introduction of the program, the discussion started regarding the anti-corruption taxation reform, or the 10-10-10 reform that was supported by a range of Ukrainian governors, members of the parliament. It is clear that many business associations have their own vision when it comes to what has to be improved. As Danylo has said, there's also a need to coordinate, a need to fit European Union directives. How do you see the organization of this process in order to make sure that we present a strategy that would be implemented by everyone, from the members of the parliament, if we need to introduce some amendments to legislation, all the way down to specific staff members in taxation bodies.
Thank you. So regarding the national revenue strategy and its preparation, it is not a simple, it is not an easy task, of course, yeah. And it's very important to carefully design the national revenue strategy and apply a comprehensive, phased approach. The government, the authorities have already started preparatory work on this. And the IMF, with the experts, we have engaged and will continue engaging with and supporting the authorities in this complex task, including by providing technical knowledge and capacity development as needed. One key point I want to make, the political ownership would be key in success of tax reforms. So one may have the best ever written strategy, but you need political ownership and political will to implement then the measures and actions designed under such strategy. Now, it's very important that a good preparatory work is done, and part of this, I think, as a first step, I will mention the action plan that the authorities are working on, and we hope that this action plan will be informed by weaknesses that were identified in taxpayers' perception surveys. And this will be used as an input for when preparing the national revenue strategy. Now, the strategy itself, just a few words, it aims to help to align the revenue mobilization, which, as we discussed already, is very important for Ukraine, with the government's development priorities and medium-term spending needs. And in the short term, the focus will be on lifting measures introduced under the martial law and on reforms in tax and customs in order to maintain the revenue base and strengthen capacity of key government institutions to raise revenues in an efficient, effective, and transparent manner. And digitalization could play an important role, as Mr. Hetmantsev mentioned. So overall, we expect that the national revenue strategy will become a comprehensive plan, roadmap that will have clear revenue and other policy targets and will cover both policy and administrative reforms. And we have mentioned in our staff report, based on discussions with the authorities, that we expect the national revenue strategy to include, amongst other things, measures to strengthen tax and customs services, revisions to simplified tax regime, to address erosion of labor taxes that we have identified. Also, and we already talked about this, alignment of value-added tax and excise duties with the EU legislation, EU acquis, yeah? And of course, and Mr. Hetmantsev also referred to this, it's important to strengthen anti-corruption measures and governance procedures to address integrity risks in key institutions of revenue administration. And we will also expect to have in the strategy more reforms, tax reforms for more medium term that would deal with post-war reconstruction and investment in Ukraine. I think I'll stop here. Thank you.
Thank you, Vahram. Danylo
Mr. Hetmantsev, you have an extensive experience when it comes to organizing work and developing documents that involve multiple stakeholders. How do we make sure that we ensure political ownership? We ensure this responsibility of Ukrainian political government when it comes to this reform process. I believe that any ideas that we introduce, they have to be communicated better. That pertains to everyone, and us first and foremost, as the people who are personally liable for the future of the country. And it pertains to our commitment to our partners. We have to communicate better, and we have to make sure that we get the ideas we implement across, and that we explain the circumstances and the reasons behind these ideas. None of us present here are happy about this or the other taxation rate, and none of us are happy about the increase in taxation rate, or I think everyone would feel better if the taxation rates were as close to zero as possible, right? However, in public financing, simple solutions don't exist because public financing is a difficult topic. And this is something that has to be communicated to the people. We have to state these things clearly with numbers, taking into consideration the other side of the public financing, which are the expenditures. And we have to take into consideration the dismantling of the myth that exists amongst the public, especially in the social media, from people who create this myth, this fraudulent myth on purpose. We have to answer the questions. We have to force the people who constantly advocate for the decrease of the taxation rate. We have to ask them the question, why? Why are you doing this? Why are you advocating for this? Why are you suggesting that we decrease VAT twice? Why? In my opinion, I'm convinced that if we fight the labor taxation erosion, we can suggest the solutions when it comes to simplifying the revenue taxation, and even maybe decrease in taxation rates when it comes to income of physical entities. But this all has to be founded on specific numbers. It has to be tied closely together to figures. And to the other side of this process, who will be paying for all this? Who will be paying for this populism? Will that be the doctors? Will that be the medics? Will that be the service members? Who will be paying for this populist solution? And if you ask the questions in this manner, if you phrase them in this manner, it becomes clear that any changes when it comes to revenue are impossible without changes to expenditures. And this is something that we have felt really well when there was this another populist discussion in Verkhovna Rada trying to restore the additional remuneration to service members without having any additional way, any additional source of revenue to fund these expenditures. And so I personally believe that we have to raise awareness, we have to work with people, we have to work with the members of parliament, answer their questions and say, look, this is very complicated because any society under crisis conditions, because war is the largest crisis we can imagine to ourselves. And any society tends to look for simple solutions for complicated issues. Any society in time of crisis tends to fall for very superficial ideas that have not been well thought through and that have been presented by certain individuals. And so, however, our mission, our task is to, despite the criticism, despite this populism, to hold our mark, to follow our line that will eventually lead us to a wealthy future in the European Union, instead of leading us to becoming yet another platform for someone's taxation experiments. So communication, engagement of as large of an audience as possible, and most definitely numbers, specific numbers. We have to teach our societies that public financing is not it is not as much about someone's worldview, but it is about math. It's about specific math. And we have to teach society to do math, even though it's very complicated under given conditions. And we can see it reflected in the draft law 8401, which is a very complex draft law that we will supposed to consider in May during the first reading of the first session of Verkhovna Rada. We'll see how well it goes. And this is this first test before the upcoming systematic changes. And we're talking about the return to as a simplified pre-war system. Yes, it's a return of fines, the return to this simplified system. Okay. We have 7 more minutes. I will ask one question to Robert.
If I may just make a point, a quick one before. So the large spending needs that we talked about and we mentioned, I mean, they are indeed very large, yeah, include increasing infrastructure and social needs. And the point I want to make is that the international community has shown its willingness to share part of the burden. And I think Ukraine needs to continue to play its part. And for this, there is a need to strengthen the domestic revenue mobilization. This is needed, simply needed. Thank you.
Thank you.
So I would like to ask a question to Robert.
Could you please look on Q&A section? There are some questions to you. I don't know, like, if you want to comment on any of them. If you want, you could answer either directly in Q&A or in your final remark. And Danylo, теж в чаті зверніть увагу одне питання до вас.
And Mr. Hetmantsev, also please pay attention in the Q&A chat. There are questions addressed to you as well that you might be interested in answering.
And Robert, so like going back to the question, like how to organize discussion among stakeholders on tax reform. You have a lot of experience in the region, in different Eastern European countries. You saw a lot of changes. Like, what is your opinion? Like, how to do it in the best way, regardless of war, and especially like in times of war when like or debates are very emotional and much more complicated than in peaceful times.
Yeah, thank you very much. A very good question. And I think indeed, at least during the war, I mean, I think the fiscal question is a key question here. I mean, obviously there are other issues, monetary policy issues, exchange rate issues, which all have their their relevance, but the fiscal question, in my view, is key, because war costs money, then you need resources. And as Vahram said, currently there's a sort of burden sharing, right? The international community is giving substantial amounts of money to Ukraine in forms of lending, in forms of grants, but this is taxpayers' money, and the taxpayers also want to see that Ukraine does its own part, obviously taking into account the much weaker economy due to the war and all this destruction and so on. But still, there must be a sort of burden sharing. And that's why I think everything that sort of endangers the tax base, in my view, is especially now really, really difficult, should not be done, because it kind of undermines the war efforts. It's as simple as that. So this is something that is really, at the moment, not the right thing to do. Looking beyond the war, hopefully soon, then I can only provide some general experience from our work. We always thought that Ukraine has more problem of tax administration rather than tax rates. So if you talked to business and so on, the tax rates were not that much of a problem. The problem was really administration, which was complicated, to some extent corrupt. And this was what business was worried about, not so much the rates. So, but again, this is, in my view, a future discussion. I hope this discussion will soon open up, but not after the war has ended, in my view. And that must be the common theme for all stakeholders, both locally but also internationally, to have the resources to fight the war for as long as it takes.
Thank you, Robert. Vahram, do you want to comment on any of the questions in the Q&A section?
Sorry, some of them are in Ukrainian, and unfortunately, I'm not that fluent yet.
Yeah. But like there are
any
them in English. Yeah.
I mean, if there is anything specific, and some, for example, I'm not sure I understand. There is one question which starts like out of the focus and ways to rebuild the economic condition. Maybe if you get the question, you could.
Okay. Like there are questions on rather important question on the cost of IMF loans. Like we did not cover this because like mostly we speak about conditionality and like policies, but like as our colleague from Bank, Alexey Blynov says, like currently IMF interest rate is close to pre-war commercial debt interest rates for Ukraine. Is there any discussion on like how to make IMF funding cheaper for Ukraine?
Thank you. So what I would say here is that, and I think it was Robert who mentioned the role of the program and in his view, what is the main contribution. Look, the IMF program of $15.6 billion is only a part of a much larger package of $115 billion that the IMF program helped Ukrainian government to put together. And the larger part of this package are primarily concessional loans and grants. So this is how I would look at this. Yeah. Thank you.
Thank you. Danylo, отже, останнє питання до вас. Все ж таки,
Danylo, the last question is addressed to you. If we look at what one of our listeners has asked, why are we talking about taxation administration rather than taxation rates? And we'll end our discussion with this question. We have discussed this, I believe, quite extensively, but I'm convinced that the conditions of life and business in Ukraine cannot all be simplified to canceling or decreasing taxation rates, because this is the factor that does not influence business conditions or living conditions in the countries that much. The first thing that's important to draw the attention to when it comes to living conditions and business conditions. That's the rule of law, in particular in taxation. The second is the anti-corruption policy. The second factor that drastically impacts the life of people and the businesses people lead. So we have to make sure that we read our system of corruption. So it would be preferable if we could carry out a reset. The improvement of infrastructure, in the wide sense of the word, that would ensure both the livelihood and the functioning of businesses with proper services, state services, and deregulation. All of these factors together, they are higher on the priority list when it comes to impacting quality of life. They're higher on the priority list than the taxation rate, and they definitely influence taxation system as well. And if all of these factors would be reflected in the taxation system, we would have a different type of quality where taxation rate itself would not matter that much. Yeah, that was very clear. No. Well, if I were to finish up talking about rates, I would like to highlight once again that I think it's important to discuss taxation of income of physical entities, to ensure the support to declarations. We might consider the decrease of tax impact on the income of private individuals. However, all of this has to be discussed and all of this has to be processed. I believe that we will be discussing the taxation policy in a wider context. There are quite a lot of interesting issues, quite a lot of ideas that arise, in particular within the context of these initiatives, when it related to remuneration, to the military service members. There is a wide field for discussion. And so thank you all for participating in this today's discussion. And I would like to invite all of you to join us at our next events that will be held. Please subscribe to our communication channels to not miss any event. Thank you so much. Have a good evening, everyone. Have a good night. And I wish all of us a successful way forward.